All right, welcome back. Joining us virtually this Friday afternoon is our financial expert, Nick Sapienza. Nick, good afternoon. How are you today?
Hey, Taylor, doing great. Thanks for having me.
Absolutely. So you're teaching us another definition today, and I just asked you during the break, is it SPAC or is it SPAC? Which one is it?
Yeah, it's SPAC. So this is something that's kind of gained popularity again this year, and kind of just speaks to the overall sentiment of the market. There's obviously a lot of enthusiasm right now, but a SPAC is a special purpose acquisition company. Basically, it's a blank check corporation, shell corporation, that's designed to take companies public without actually going through the traditional IPO process. And IPO is something that we talked about in the past, but really it allows retail investors like you and me to invest in private equity type transactions. So the way to think about it is, it's like if you love a business but you can't buy its stock because it's not publicly traded, an IPO or a SPAC might give you that opportunity. But when it comes to a SPAC, it's a little less stringent than the IPO. It's kind of like that situation where a friend says, hey, I've got a great business idea, loan me some money and I'll pay you back with interest, right? Like, we probably all had those situations. But really with the SPAC, it's just a little bit riskier, right? You're leaving it up to the market to determine the value of that company that they bring public. And at the time that they're raising money, you might not have any clue. It's like the mystery flavor Airhead. You don't know what it's going to be, but you're like, I'm trusting these people and I'm going to go for it, and we'll see what we end up with. And maybe you get, like, for example, Utz potato chips and pretzels has been one of or at least a consideration for a SPAC, or one of the ways that SPACs have come or brought companies public. Virgin Galactic has been another one. And this year there have been two that are kind of polarizing. So Nikola is like a sort of a Tesla ripoff, and it went public through a SPAC, and it's lost 80% of its value since then. Whereas DraftKings, which we're probably all familiar with now, we just voted on something similar in the last election, is basically, it's done really well. It's up 450% year to date. Okay, so yeah. But here's the data point. I think this is important to have this context, and then you just make your decision based off of this maybe relevant information. So since 2015, 89 SPACs have completed mergers, and they've had an average loss of 18%, a median loss of 36%. So look, 70% of these SPACs lose money. Okay, they're just garbage. You don't want to touch them. You compare that to maybe the more stringent IPO, and those are up an average of 37% again since 2015. So this is an article from Institutional Investor, which you can Google, and I found it through the Reform Broker blog. And if you're not subscribed to the Reform Broker, I would highly recommend you get on that. So yeah. I guess after you've heard all that, you say, should I invest in SPACs? And I mean, first of all, SPACs aren't an asset class themselves. It's just a tool to take a company public. But it's removing a layer of scrutiny that would have otherwise separated and removed some of the worst offenders from that process. So it's very speculative. It's very risky. So if the casinos are closed and your DraftKings app if that app is not working for you, and you have to scratch that itch, maybe that's where you get it. But it probably doesn't make sense through the lens of your typical financial plan.
Yeah, so I guess we have about 30 seconds left. There's not really a way to tell if a SPAC is going to be good or necessarily bad.
Right. Yeah, it's really tough to tell, especially, I mean, even with an IPO, right? It's just the bottom line is that, you stick with buying high quality companies that you're familiar with, you've done your research on, maybe they're profitable, maybe they pay a dividend, maybe you use their products, right? But that's typically the way, because a lot of this is just very speculative, right? There's a lot of what ifs.
Well, Nick, I think you broke it down in layman's terms for us today. Thank you so much for coming on the show to chat about this.
Thank you for having me.
Absolutely. If you guys want to learn more or rewatch this segment, be sure to head to our website, klaf.com. It'll all be there. In the meantime, let's go ahead and send it on over to Adam Olivier.